Welcome back to Cymex FinTech Weekly Market Insights, and this is part 2 where we look ahead to what's going on next week or this week, depends when you're obviously listening to this. Okay, so first thing I would suggest this week is watch small banks in the US. Well, even medium-sized banks, I guess. So let's see if nervous savers decide to move their cash and transfer it to the big banks. Obviously they're covered up to $250,000, but whether that's enough for a lot of them, I really don't know. We now start the next round of central bank meetings. The Fed, ECB, Royal Bank of Australia, I believe Norway as well, all come in this week. So in the US, it's a big week for data. So we're going to get the latest JOLTs. These is the jobs data released. There's lots of jobs data, obviously, because then we've got ADP and at the end of the week, NFP. And obviously, of course, jobless claims on the Thursday, as we get every week. Now, when it comes to NFP, I will focus more on the hourly earnings and the weekly hours work because they're the inflationary parts of it. We know that they're up to full employment at the moment, so for me, I'm not too fussed about that. It's the other bits that have got me more interested. We also have, of course, the FOMC rate decision. And that's expected to be another raise of 25 basis points, and unless the First Republic Bank panics the markets, of course. Now, price stability remains their #1 priority, I would say. As I mentioned, jobless claims will be out as well, so that's just going to give us a bit more insight into if firms are shedding workers and if there's less jobs available. And ISM finishes the data for the US. Then in the UK, there's not too much out. It's only housing data and PMI. And in Europe, Monday is pretty much a holiday. In the EU, with inflation data, we've got CPI and PPI. And of course on Thursday we've got ECB, where the question is going to be 25 basis points or 50 basis points. Then we also have PMI coming out, retail sales, and also a bank lending survey. Then just looking at Germany, we will see if consumers are spending when retail sales are released. Plus industrial production and manufacturing. This still just seems to be that sector that's struggling more than anything else, not just in Germany, but in most countries. China has a sort of a holiday going on this week, Gold Week, and PMI was released with exports lower, but then again, non-manufacturing was higher at 56.4. So again, just that manufacturing's really still being held down, and non-manufacturing was higher probably in China as a result of the real estate market just beginning to recover. Australia retail sales and New Zealand unemployment data finishes the week's data for various countries. As I said, just be a little bit wary of how the collapse again of another bank impacts the markets. Whether that is going to start to lead to another sell-off in the stocks, I am not really sure. On its own, probably not. But when you add it into the rest of it, then it could just make it a little bit more different. So, First Republic were in trouble anyway, but then they had that sort of cash injection of deposits from 11 of the major banks, the big boys in the US. But obviously they didn't want to come in and take it over fully, or maybe they will now. Let's wait and see. But that's this over for what to expect next week. Of course, I'm going to be interested in the JOLTs, ADP, and NFP. But Wednesday obviously is going to be the big one as well with the Fed. So lots and lots coming from the US. It's going to be an interesting week. You know, just remember your risk management, guys. Okay, I'm going to move on to part 3, which is all about the macro outlook. Before I do that though, just going to remind you as usual of what we provide in the way of services. Now, we've got our daily newsletter, global news, my views, and fresh daily chart levels and fresh pivot points each day as well. You know, why not try it? It doesn't cost anything. Then 1-day workshops, you know, just discover if trading could be the next career for you. Maybe you just want it as a second income. And of course, we can fill in any gaps that you've got in your existing skill sets around trading. Our 1-week course, by the end of it, you're going to feel confident, you're going to feel competent when it comes to trading. Does it make you a trader? Of course not, but it is going to give you those foundations to build on, which is really important. And if you've got an inner trader, I will find it. If you really want to make trading your career, then our accredited masterclass is the one for you. It's designed to provide you with all of the knowledge and trading tools required to navigate any market. And you know, our training is across all the asset classes, which I think is really important, because you've got to find out which one is right for you, and that takes a little bit of time and experimenting. Then trader mentoring, just to help you get to that next level. We consult to individuals and companies hedging FX, commodity exposure, etc. We create robust yet flexible plans there, and provide trader education, not just to individuals but exchanges and brokers as well. And if you're lacking, or you feel as though you're lacking enough capital to become a trader, or you don't even want to risk your own capital, then just check out our partner and just see if that could be an option for you, because you know, that way you've got to pass their challenge. But if you can do that, then you know that they provide accounts from 25k up to $1 million. So if you've got any questions, info@cymaxfintech.com. Anything you'd like to aim directly at me, it's chris.tubby@cymax-int.com. Okay, so now I'm going to move on to the macro part, which is part 3.